These are opportunities to buy in my eyes. These are the times that you get paid. When you buy low and sell high. There's a lot going on. There's a lot of uncertainty. It's a crash. Crypto is going down. We're dealing with a huge pullback in the market right now. Bitcoin lost like $10,000 since the last time I checked, like what, a month ago? We got the Fed is uncertain to cut back on rates or keep rates the same or raise rates even.
Throughout 2024, investors have eagerly been following Fed press conferences for signals around interest rate cuts. And it's not just Fed Chair Jerome Powell they're listening to. New research shows that other members of the Fed also move markets in significant ways through public comments. But what happens when Fed officials disagree? As anticipation for clarity around rate cuts intensifies, so has the debate around how the Fed communicates with the public.
It's very uncertain when it comes to the Federal Reserve and the markets. Pretty much, it's really the most annoying thing ever, kind of like just waiting on the Fed to determine how much my assets is going to be valued at the present moment in the market. But XRP is currently under 50 cents. Render is around $7. These are opportunities to buy in my eyes. These are the times that you get paid. When you buy low and sell high. You buy when it's blood in the streets, you know? So with the Fed raising interest rates, which is highly unlikely being that, you know, the climate of the market right now, I don't think we can afford a higher interest rate. That will push us closer and closer to recession. And now the Fed will raise interest rates if inflation is not under control. Does inflation feel under control to you? Not so much. So more than likely, that's still a possibility in my opinion, and that's actually something that I overlooked. I thought that they had enough with interest rate hikes because, you know, that's going to lead us closer to a recession and people will lose their jobs and all kinds of, you know, bring out the violence. It'll be a sad sight to see, especially with the bank failures. We had just recently one of the first banks to fail for the year ever since the Federal Reserve announced that they will stop their funding that they provided last year.
The Federal Reserve hastily launched the Bank Term Funding Program, or BTFP, in response to a slew of bank failures. The BTFP allowed banks access to much-needed liquidity without having to tank their balance sheets. Unrealized losses, combined with little to no reserves, meant that the minute that depositors withdrew more than usual, banks were forced to sell these assets at a loss, revealing just how little capital they had, triggering classic bank runs. So to mask this reality, the Federal Reserve created the BTFP, and it works like this. Banks and credit unions can borrow from the central bank using their U.S. treasuries and mortgage securities as collateral. But unlike other borrowing options, this allowed banks to value their assets at the original value. Not the real market value, which had plummeted, but the original value, which inflated banks' balance sheets and made them look way healthier than they actually are. This is once again a classic way that the Federal Reserve is propping up a failing system, pushing out the problem another day. Nothing has been solved, the same issues still exist. Banks are still holding on to these diminishing assets, they're making risky bets, and they're still allowed to hold next to nothing in reserves.
So once the Fed announced that they was going to stop their funding that they usually provide, you know, that's going to cause some failures. So the BTFP is an additional source of liquidity against high quality security, eliminating the institution's need to quickly sell those securities in times of stress. That lifeline was always there. Well, I'm not sure how long it's been there for the banks, but that lifeline has been there recently for the banks. And that lifeline has stopped on March 11th. So
what we're looking at today is over $160 billion worth of loans from this program. As a quick reminder, it only took a $1.8 billion loss to trigger Silicon Valley Bank's collapse. So what is going to happen when this lifeline is taken away? Is that maybe we're finally hinting around the fact that banks are hanging on by a thread, and that the FDIC, the people who are supposed to protect your deposits should anything go wrong, don't even have a fraction of the amount of cash they would need should a handful of banks fail.
I mean, cause and effect is going to be some collateral effects out of that, and I just keep on seeing headlines that says the first bank that failed, and it's very interesting. That's only, you know, that's specified. It's emphasizing the first bank that failed. Like they're looking forward to more bank failures to come out of this probably this year. You know.
The U.S. government seized First Republic Bank on May 1st and struck a deal to sell the bulk of its operations to J.P. Morgan. Regulators hope the move will head off a chaotic collapse that could reignite the banking crisis.
No way. When interest rates were really low, the bank collected a lot of deposits, made a lot of mortgages. But when rates suddenly shifted last year, the bank's business model started to look a little bit more precarious. Some of the biggest banks collected $30 billion worth of their own money, and they deposited it at First Republic Bank, basically trying to make up for the deposits that customers had pulled. It was helpful for a day, but it didn't stop the panic. Early in the morning of May 1st, an announcement came out that JP Morgan would be buying First Republic Bank, and this was a deal that was orchestrated by the Federal Deposit Insurance Corp. When the FDIC conducts this process to sell a bank that it's seizing, it's basically looking for the best bid. In the deal, JP Morgan will be taking on some $92 billion in deposits from First Republic, buying a lot of assets, including the bank's loans and bonds. Shareholders will get wiped out. This is the deal that will effectively allow First Republic to live on as a part of JP Morgan. That said, the problems that kind of led to this crisis haven't necessarily been resolved. Interest rates rose really quickly. The value of assets on banks' balance sheets fell a lot. It doesn't appear that anything's imminent at this moment, but I think a lot of people would be hesitant to say this is over.
A headline just recently dropped why hundreds of U.S. banks may be at risk of failure. Hundreds of small and regional banks across the U.S. are feeling stressed. You could see some bank failures. I could go on and on about how much of a mess this may be. So where I'm going with this, though, is that the economy is fucked. So interest rates going up, that's where I was saying. I was saying that interest rates going up is very surprising because the more the rates go up, the more stress that these banks may feel. But Jerome Powell's not kidding about the interest rates having to be around 2%. And I think we're far from that. Besides the Fed talk, I could go on and on about the Fed talk. However, if they keep interest rates the same, may be interesting also. They keep interest rates at the same level, things may be stagnant. It's going to lose euphoria in the markets. So it may trigger some people to sell off. Now, if they lower interest rates, it's going to cause a bull run. Now, what's my overall viewpoint? It doesn't matter. You know what I'm saying? This asset is here to stay. This asset class is here to stay. So if they was to keep interest rates the same and prices stay the same, I'm DCN. You know what I'm saying? Dollar cost average. That means taking a little bit of my paycheck every week and just throwing it into my favorite cryptocurrencies. And my favorite cryptocurrencies that I'm an advocate for is ISO 222 compliant cryptocurrency. Why? Why is ISO 222 compliant cryptocurrencies my favorite cryptocurrencies that I choose to advocate? Reason being is because they're, in my opinion, not financial advice, the most safest assets because of this network.
What exactly is ISO 20022? Well, it's a new global standard for financial messaging that is making waves in the industry. Basically, it helps financial institutions securely and efficiently exchange information with each other. It was created by the International Organization for Standardization, or ISO, an independent, non-governmental international group that sets international standards for things like quality and security management. If you ever sent a wire transfer, you may have heard of another messaging standard called SWIFT. It's similar to 20022, but there's some key differences between the two, like the data format, level of detail, and security features. SWIFT uses its own format, while 20022 uses XML, which is more flexible and easier to integrate. Some central banks and financial regulators have already required the use of ISO 20022 for specific systems and applications. For example, the European Payments Council has set a deadline for 2025 for all SIPA payments to use 20022, while the Federal Reserve in the US is encouraging financial institutions to adopt it by 2023. So what does this mean for digital currencies? ISO 20022 has the potential to play a key role in the development and implementations of CBDCs, as it provides a flexible and standardized framework for financial messaging that ensures consistency and interoperability between systems. Adopting ISO 20022 could increase the use of cryptocurrencies that are compliant with it. Two cryptocurrencies that are members of the ISO 20022 standards body are Ripple's XRP and Stellar Lumens. Recognizing the value of ISO 20022 messaging and its potential to transform the financial industry, Stronghold has utilized this technology in conjunction with blockchain ledger payments in select projects. Messaging standards are crucial for enabling the efficient and secure exchange of financial information between different systems and technologies. They play a critical role in improving the overall performance and reliability of the financial services industry.
There's reputable companies and entities and, fundamentals behind these coins, and it's ISO 222 compliant, meaning it is compliant with regulations and with the banking system today. And what is the core essence of cryptocurrency? Is banking. You know what I'm saying? It's about finance. So that's why I'm an advocate of the ISO 222 compliant cryptocurrencies as kind of a safe haven asset to me. So what I do is I DCA into these assets, and if the price goes lower, I just keep on buying. If the price stays the same, I keep on buying, probably a little less. And if the price goes up, then I take profit. You know what I'm saying? And right now, in the whole macro perspective of cryptocurrency right now, I feel like we're still in the accumulation zone. This is still the time to stack your bag. You know what I'm saying? This is to stuff your bag with as much as possible, because when the bull, when you get these exponential gains and stuff like that, you're always gonna feel like, damn, I should have got more. So that's my take on the whole federal aspect of the market right now. If they raise interest rates, then it's going to hurt the market. I'm still going to buy cryptocurrency. If they keep interest rates the same, it's going to hurt the market. I'm still gonna buy cryptocurrency. And if they lower rates, then it's going to help the market, and I will be selling cryptocurrency. I tell y'all straight up how it is. You know what I'm saying? If it goes up, I sell. If it goes down, I buy. If it stays the same, I buy. Only if it's a fundamental asset. If I know it's going to stay, if I know it's for real. I gotta know it's the real deal, man. You know what I'm saying? Like, fuck, this dog coin, these fraud coins. What the hell is this? Who's behind that? Who's the face behind these people? I invest in assets that you see the people in suit and ties discussing over. You know what I'm saying? The ones that's in the courtrooms and striving for regulation, So we are in a revolutionary era. This is a amazing time to be alive. So I just wanted to touch bases and share my opinion on the current climate of the market right now. To me, I feel like it's really up in the air with whatever the Federal Reserve got to say. But that's all I'm gonna share for now. Check in my next video. Hope you like this one. Hope it was informative. And click the links below. Get at me. Subscribe. Peace, love, respect.